It sounds great. I think, but I guess, and I'm like in the position where I guess this is how my clients feel when I'm explaining a triple net property to them and never had any really experience understanding or working with or hearing about a triple net property. So I'm trying to process everything you're saying, which is interesting. But I think this kind of comes back to the point of why I think this job is so great. One, you learn all the time. You learn every day something new.
Had you ever heard of a deferred sales trust? Most people get it confused with a Delaware statutory trust and they don't know the difference between the two. But have you heard of that before?
I was about to say, do you mean Delaware statutory trust? Because I'm obviously familiar with DSTs, but no, I've never been familiar with the deferred sales trusts. And I think it's definitely like I literally just had this conversation with an owner, two partners. One lives in Greece. He runs the business. And he decided not to sell because his kids will get a stepped up basis. But you're right, his estate is definitely worth more than $13 million. And that's something that I should be talking about with people, not necessarily as the expert, but more so introducing them to people like yourself to understand their options, because their kids who have no interest really in real estate will have to figure out something. And of course, depending on the debt situation of the portfolio, maybe you're able to sell off 2 assets and keep everything else. And again, it's really about understanding your options. But no, that's I was not aware of that.
You picked up on it right there, right? And that's really like, what is the major problem? Like, again, back to the original thought, like if you're being great listeners, meanings, listening and finding out what the true problem is and making them aware of that problem. We were working with a gentleman, he's selling a $60 million business in Arizona. This is just a couple months ago. And he wasn't even aware of the death tax, right? And I think the show Yellowstone, right? Yellowstone is the whole concept of Kevin Costner with his land in Montana. That's the entire show. Hey, mom, like Beth, the daughter, the attorney, is like, Dad, you got to sell the land, because if you don't, you die. They're going to nail you with the death tax. Or B, you if you get the step up basis, they're going to get the death tax taken anyways, right? Or if they kill you, it's out. So we got to get it outside the taxable estate, like this whole thing. So to me, this is like one of the biggest kind of like fumbles of the commercial real estate industry, is not connecting these dots on this $84 trillion transfer that's happening over the next 20 years,
right,
and really bringing to light, like, what are the opportunities? And it also should be a compelling reason to sell, because if all you're ever saying is, look, let me find you that up leg that I promise is going to be a great fit, and all these, new toilets, new trash, new liability, new debt, all of these things, and let me line up that perfect puzzle piece to fit, versus, and that's just capital gains tax, versus let me solve the bigger issue for your legacy and for your wealth. And then number 2 is just the buy high, sell, buy higher 180 days later. Now, that can also be difficult, right? Where you have debt that's fixed at a lower interest rate, and now it may be fixed for a couple more years. So you have some certainty there. Like, it's hard to sell and remove, like, get rid of that debt and go into higher debt on a new deal, right? So it's trading we call that debt flow, right? Like, right. It's not just cash flow, it's not just tax flow, it's also debt flow. We were spoiled for the last, before the last year and a half, for really 10 years, we were spoiled, right? And we just took debt for granted. It's always going to be low. Now that throws a whole wrench into a lot of these deals. And with the deferred sales trust, what's beautiful is you can be out of debt. You don't have to replace debt or equal greater value. You don't have to replace a property in purchase within the same time frame. There's no 45-day 180. You get a new depreciation schedule. Like, we wrote a book on this whole thing, and we try to like spread it across the broker industry. But it's kind of like old dogs, new tricks, right? Like, people are like, so I'm just curious, like, when you hear this stuff, what comes to mind?
No, I mean, it sounds great. I think, but I guess, and I'm like in the position where I guess this is how my clients feel when I'm explaining a triple net property to them and never had any really experience understanding or working with or hearing about a triple net property. So I'm trying to process everything you're saying, which is interesting. But I think this kind of comes back to the point of why I think this job is so great. One, you learn all the time. You learn every day something new, and you learn from people that are really good in their field, whether that be the entrepreneurial who has run a successful business and now has a portfolio worth $50 million, or someone like yourself who's an expert in deferred sales trust and how to structure things and work it in the right way. So I think for me, it's just another quiver in my arrow to provide value and options to people. And I'm definitely of the camp where I was not thinking enough about estate tax. What I can say though is, again, given the industrial dynamics, a lot of the times it can make sense, again, just because you're selling at such a high price point to a user. You're really selling at a 4 cap, 3 cap, and then you're able to buy, again, in a triple net property like a 6 cap, or in multifamily New York City, a 7 cap. So that arbitrage opportunity still exists today, but of course you're right, especially for multifamily in New York City. If you are going to be doing that 1031 exchange, it's very much 6 cap to 6 cap, or maybe even like 6.5 cap to 6 cap, and you're really making a lifestyle change. So it's definitely something I should be more aware of, the Deferred Sales Trust, and glad you brought it up.